about 1.2% in the red. The Abu Dhabi market is about 1% in the red as well. And of course, the Qatar market at 10,317, off track 0.61%. Markets in Europe are focused on today's rate decision by the U.S. Fed. Analysts are expecting a rate hike of 25 basis points from Janet Yellen, with the announcement said to be after European markets stay closed. Let's chat more today's and other headlines with the DWTV Channels Television financial correspondent at the Frankfurt Stock Exchange, Conrad Bussen. Conrad, good afternoon. It's good to see you. Now, consensus is about 100% that the U.S. Fed will raise the Fed fund rate today. If this happens as already priced in, how will the markets move on from this start point?
Bosun, this will depend mainly on two things. Number one is the guidance that Janet Yellen, the chair of the Federal Reserve, will give tonight in terms of what we can expect for future rate hikes next year. If the Federal Reserve believes that inflation risks in 2017 are higher than economists and the Fed itself have been thinking so far, and if the Fed is having the opinion that the economic dynamics in the U.S. might be stronger in 2017 than they consider at the moment, then this could mean that the Fed raises interest rates more than 2 times in 2017. A two-time rate hike is what most economists think the Fed is planning for next year, but well, it could be more. Factor number 2 is Donald Trump. The question is, will Janet Yellen mention Donald Trump and his expected policies for the economy? And also, will Donald Trump maybe Twitter something after Janet Yellen's press conference? During his campaign, often Trump criticized the Federal Reserve for its generous monetary policy, but now that he himself is facing responsibility, he might like the idea of a continuously generous monetary policy. Also, of course, if he twittered something in response to that press conference tonight, it would be considered a breach of custom. The president or even the president-elect are not expected to directly comment on, the Fed and its independence.
Conrad, I'm sure we can wager that President-elect Donald Trump will tweet once Janet Yellen and her team takes that decision. You can bet, you can wager that. Just be sure. He seems to have a love for this Twitter thing. But let's move on. Another very high-octane economic driver is the rate decision tomorrow from the Bank of England. What's the outlook on this rate decision by Carney tomorrow from the rest of the Eurozone watching the Brexit saga?
Well, a majority of people here don't believe that the Bank of England tomorrow will change interest rates for the UK, which would be a bit of a change of stance of the Monetary Policy Committee of the Bank of England, which after the Brexit referendum was more or less indicating that another rate cut was likely to happen. But contrary to what the Bank of England and most economists had predicted after the Brexit referendum, the economy in the UK has done quite well, so that now another rate cut has become very unlikely. On the contrary, given that inflation is on the rise in the UK, it's even possible that the Bank of England indicates something like a rate hike in the time to come. The inflation projection that the Bank of England has for the year 2019 is 2.5%. In the US, inflation is expected to rise. Even here in the Eurozone, at the moment, inflation is low, but it's expected to rise during next year. So, an indication tonight for maybe a rate hike in the UK is what the market will be looking on.
Yes, Conrad, but of course we all know that fingers are crossed in Asia right now, especially the emerging markets, watching Wall Street very closely for the U.S. FOMC decisions as well as tomorrow's BoE. How do you think Asia will react to these rate decisions in the week?
You know, Bosun, preparing this answer, I found a headline in today's Hong Kong newspaper, the South China Morning Post. Here it is. It says, "Be afraid, be very afraid," as the U.S. Readies to raise interest rates. This indicates quite clearly that people in Asia are very nervous about what will be the guidance tonight by Janet Yellen. Because, you know, countries that heavily rely on the volatile flow of international capital will likely see outflows of capital after indications for stronger rate hikes in the U.S. Higher interest rates in the U.S. mean that the dollar as a currency to invest in becomes more attractive. We've seen it a year ago in countries like Malaysia, Indonesia, also in India. When the last time the Fed hiked interest rates, money went out quickly out of those countries and into the US. Also, China saw capital outflows in great amounts. And also in China, I'm sure many people are very nervous at the moment.
Conrad, I'm sure if all the dollars flow out of Asia, other emerging markets into the United States, that will be something good for Donald Trump, the president-elect, to tweet about. Perhaps he will have a thank you note to Janet Yellen in his post-FOMC tweet. We have a dinner time today to watch all of that, don't we, Conrad? We're at the same time zone, Central European time. Have a great day with the rest of your colleagues for Channels Television at DWTV in Frankfurt. Conrad Bosun. One paragraph quickly. Asian shares flip-flop on Wednesday. Markets cautious, as you've heard, ahead of what is expected to be the Federal Reserve's first rate hike in a year, with the comments on the outlook. Key Japanese benchmark indicator 225 closed slightly flat, 0.02. The SX 200 in Australia was about 0.75%, sidestepping the broader Asia, while the Shanghai Composite was 0.45%, and the Zhejiang Composite lost 0.81%. The Kospi ended up 0.04, as flat as well, and by mid-afternoon, the Hong Kong's market was about 0.28%. Okay, we'll be back after the break, give you a snapshot of the U.S. futures market before the opening bell on Wall Street.